Hello everyone, Professor in MoneyPigTrading. Today, February 3rd, 2024, we're going to talk about ZIM shipping stock that we haven't been talking about it for a year and a half. Currently, we think it's a speculative buy in this Red Sea crisis. And we know most of the followers on YouTube learn about us from ZIM, so we feel obligated to give you guys some update. So the left side is the ZIM daily chart. You can see 48-day EMA cross back to early December and breakout since $6. Currently has been consolidating between this $11.5 to about $15.4 for quite some time, about 2-3 weeks. And currently has been heavily shorted on the right side. About 26% of the shares being borrowed and shorted by the Wall Street funds and some retail investors. So let's take a look what our thoughts are and what's going on this big ZIM stock price pump, and what's our current thought for the next few months. So really quick disclaimer, we're currently long ZIM stock. We're not financial advisor. Please invest at your own risks. So what happened on the container shipping rate is back to July 2019. It was pretty flat. And during the pandemic crisis, the shipping rate actually skyrocketed. And if you learned from us about ZIM, you probably know what happened is basically a lot of shipping congestion and a lot of port congestion that make the container shipping rate moving up really quickly from $2,000 all the way to about on the peak at $11,000. That also make ZIM cash cow pretty much. That it was a money-losing company, but with this shipping rate increase, they were able to provide a really decent dividend. And unfortunately, when pandemic went away, the shipping rate actually normalized really quickly, and so does the ZIM stock price. Dropped from the all-time high $90 per share back down to $6 per share. Until recently, the Red Sea crisis pushed out the container shipping price, and so does the ZIM stock, which highly correlate to this container shipping rate index. And what happened back to December this year, or late December last year, is there's an attack on the cargo ship in Red Sea, right? So what happened is if the Red Sea is being blocked here, which is a pretty commonly used container shipping route, which is the blue line here, this example is from UK to Taiwan. And with the Red Sea now being blocked and all the container ship, lots of container ship, especially dealing with Israel, got attacked, making all the container shipping company had to detour with the red line here, passing by this Cape of Good Hope. That just make the route 9 days longer, from 25 days to 34 days. That make the container shipping rate a lot higher. And especially not only the time gets longer, but also the turnaround date of those container ships will become longer. That could also cause the port being congested worldwide, which can prolong the time not only in the shipping route itself, but also the time just waiting to get into the port can also get a lot worse in the next few weeks or few months, which could also push up the container shipping price even higher. And to make the situation even worse, what happened is the Panama Canal also having a drought. So this is a Panama Canal. You can see has passed through this reservoir, which the canal used this reservoir to control the water level, right? Like if the ship is coming, they will push up the ship by elevate the water level over here, so the ship can pass through and doesn't have to make a big detour. However, what is happening is there's actually a really big drought happening, that making the transit day on the y-axis actually number of the cargo ship that can transit through Panama Canal drop. Usually each year, you can see it's around 10 ships per day. Now you can see the y-axis now is dropping to about 5 ships per day in the last winter, December 2023. And it's just because the drought is getting a lot worse. And you can see the auction price just to pass through Panama Canal with this Neo-Panamax type of container ship, which is really large one. The price to pass through, it just becomes so much more expensive. You can see from early November to late December 2023. So this also make the container shipping rate going up worldwide because this drought potentially don't have any way to resolve it until the next rainy season coming in Panama, which is anywhere between May to December 2024. And we have to see. Nobody can predict the weather, whether this rainy season is going to come in late or early, and how much rain is going to drop is a big TBD, to be honest, right? So all this together, if the container shipping rate continue to skyrocket or even maintain at this current level, it's going to help ZIM a lot. Just a really quick recap, the ZIM business model. Their net profit is coming from the container shipping revenues minus the chartering costs. They actually rent their fleet a lot, so they have to consider those renting costs, or the terminal is chartering costs. And their shipping revenue is actually coming 70% of spot rate plus 30% long-term rate. And the long-term contract is negotiating between February and May. So that's why if the rate can continue to go higher or at least maintain at the current level, will be so important in the next 2 to 3 months, because if they can maintain during this February to May each year negotiation long-term contract, that can help the ZIM long-term profits a lot, right? This 30%. And if the rate continue to shoot higher, ZIM is going to benefit directly from it. And that's also why, because 70% spot rate is 70% of revenue is tied to the spot rate. And that is also why the ZIM stock price is so highly correlated to the worldwide shipping index. So looking at this, if we can maintain this at the higher rate in the longer time period, ZIM will continue to push up. We do think if the rate can at least maintain at this level to the next 2 to 3 months, based on our fundamental analysis, ZIM should be fairly traded at least $20 per share. But of course, their March 11, 2024 earning will provide us more details about their costs and how many long-term contracts being negotiated and what kind of guidance. And potentially, if they can distribute dividend again the second half this year, we do think that stock price could be pushed up more than $20 per share. So a lot of to be determined, depends on earning, depends on the container shipping rate, but we do think it's a good speculative buying opportunity. And just some risk factor you have to consider. Again, this stock price has been highly correlated to the container shipping cost. Like we saw earlier, right? The container shipping rate went up from 2020 hyperbolic until early 2022. And you can see the ZIM quarterly revenue goes up together with the shipping rates, and it dropped together with the shipping rates. So it's totally very speculative together with the worldwide container shipping index. So right now, the ZIM weekly chart, as you can see, went up, went down, right? Right now, it's both flagging on weekly chart. We do think it could push up to, like we said, $20 per share, fundamentally with the current shipping rate, if it can maintain the next 2 to 3 months. However, there's some major development in the Red Sea between the last 2 weeks, January 26th and February 3rd. So first, a few days ago, another tanker got attacked, which is really bad news, because now also the tankers are started rerouting, not only just container ships. So we are actually seeing a lot of tanker stocks pushing an all-time high or year high in the last 2 weeks. However, in the last few days, China is actually putting pressure on Iran to make this rebel group behave, because they are saying, first, US is putting pressure on China, right? And second, if the China cargo ship also get attacked, it's going to damage their economic interests. So they're telling them like, hey, you guys have to behave. Just don't attack all the ships that pass in the Red Sea. That is going to impact us as well. However, right after they said China is putting pressure, right, the rebel in Yemen also attacked US Navy the very next day, which is very aggressive, with an anti-ship missile, and that one was intercepted by the US Navy. So a lot of those international political game happening that we just don't know what happened. And then last week, unfortunately, the US Jordan base was attacked by the Iran-friendly militia, and unfortunately 3 soldiers passed away. And today, the U.S. actually fought back by bombarding some of the targets. So a lot of moving pieces here, a lot of uncertainties. I don't think anyone can predict what's going on. But it does look like, at least to our eyes, that the situation won't be de-escalated anytime soon. That's our assumption. And if that's the case, we do think the container shipping rate will continue to maintain at this level, if not going higher. And also, the fundamental factor to look at is the shipping demand. So this is the U.S. Federal Reserve data, retail to investor to sales ratio. You can see during pandemic, this number skyrocketed. That means all the retailers in the U.S. have a really shortage of the inventories. And after the pandemic ease away, and so does the inventory levels, However, recently you can see the inventory shortage start to come back a little bit. But however, we do think the shipping demand is not as huge to the pandemic level. So that means the container shipping rate on this side doesn't really have that fundamental support that we have seen back to 2020 when the container shipping rate skyrocketed and the ZIM pushed from $10 to $90 per share. That fundamental factor, the inventory shortage, at least for now, is not there. But if the Panama Canal and Suez Canal continue to have this problem, or Red Sea, we could see this inventory shortage start to come back and push the container shipping rate even higher. Again, a lot of moving pieces, really hard to predict. We just have to play by ears. So the conclusion right now we have is we think ZIM is a speculative buy. If the World Container Index can continue to hit this $5,000 remand here for at least 2 to 3 months, when ZIM negotiate the long-term contract, we think ZIM should be at least fair valued at $20 per share. However, don't forget ZIM is right now 26% of shares being borrowed and shorted. So we think if they can start to distribute dividends, cause some short squeezing, in the next 3 to 6 months, we could have $40 per share on the table in the best case. But again, it's TBD. We don't want to promise on those high-level targets with so many uncertainties. However, the worldwide container index, the risk you have to consider totally depend on Red Sea situation and Panama drought situation. If one of them or both got eased or de-escalated, we can see the WCI drop significantly, and so does the ZIM stock price. And also the Panama rainy season, like we mentioned, could start in May, so that could ease the situation. But again, we don't think there's a way to de-escalate Red Sea situation in the near future, so we believe the container shipping rate could at least go up from here, or at least maintain at this level. So just want to highlight we have a really decent long-term investment discount program. We started this benchmarking fund with $65,000 back to 2022. As of now, the account closed at $113,000. So that's given us 62% of return so far. And when it is 2 consecutive years that we beat the SPY and QQQ in our long-term investment. 2022, we lost 9.8%, and the general market lost even wider. You can see NASDAQ actually lost almost 34%, while we control the damage to about 10%, minus 10%. 2023 was really decent. We report 67% whole year return, which is totally outperformed SPY, 24 and 53% NASDAQ. So really awesome performance. So if you want to learn about our Discord program, which is recently being priced at $80 per quarter for long-term investment, make sure to check at www.moneypigtrading.com. We also are available at a wide range of social media. Make sure to follow us on MoneyPigTrading on either Twitter, YouTube, Instagram, Facebook group, or Reddit. Thanks for watching. See you guys next time. Bye-bye.